Welcome back to the Deep Dive. Today, we're stepping into a world you might not usually think is all that exciting. Pre-engineered buildings. But trust me, once we get into it, you'll see why this is a fascinating industry. We're diving into Interarch Building Products Limited, a leading player in India using their recent earnings call and some industry reports to guide us. So get ready to learn how they're changing the construction game.
Yeah, what I find really interesting is how Interarch has positioned themselves as like a one-stop shop for their clients, from design to assembly. They handle it all. They're not just delivering steel, they're delivering a complete solution. And this is particularly valuable in a rapidly growing economy like India, where businesses really need that efficiency and reliability.
Okay, so let's unpack that business model a bit. What exactly is a pre-engineered building, and how does Interarch's approach differ from like traditional construction?
Okay, well, imagine ordering a building the same way you'd order a piece of specialized machinery. That's the essence of Interarch's model. They have a team of over 125 engineers who work with clients to design the building according to their specific needs. Then, using steel plates and coils as their primary raw material, they manufacture all the components in their own factories. And they even fabricate the structural sections in-house, rather than relying on pre-made parts.
So they control the entire process from start to finish. That's pretty impressive. What's the advantage of that kind of vertical integration?
Well, for one, it allows them to deliver all the building components to the client site ready for assembly. It's like a giant, incredibly complex Lego set, where each piece is pre-cut, pre-drilled, and even pre-painted. This significantly speeds up the construction process and minimizes on-site work. No cutting, drilling, welding, or painting needed at the location. That's a huge time saver for clients.
So they're essentially taking the hassle out of construction, but they also mentioned being agnostic in several ways. What do they mean by that?
Right. They highlighted being agnostic in 3 key areas: industry, building type, and geography. So first, they serve a diverse range of sectors, including warehousing and logistics, manufacturing, renewables, and even data centers. They're not limited to a specific industry, which gives them a lot of flexibility. Second, they're not restricted to a particular type of building, whether it's a simple warehouse or a complex factory with multiple levels and conveyor systems. They can adapt their system to meet the needs of the structure. And finally, they can operate anywhere in India, from the Himalayas to the coasts. They've got it covered.
So they've essentially created a system that's incredibly adaptable and can be used for anything, anywhere. That's a pretty powerful proposition, especially in a diverse market like India.
Absolutely. It allows them to tap into a wide range of opportunities and cater to the specific needs of different regions and industries. That's a significant advantage in such a dynamic market.
Speaking of market opportunities, let's shift gears and talk about the industry outlook. What are some of the key factors driving the demand for pre-engineered buildings in India?
Well, Interarch themselves describe their business as a proxy for private capital expenditure in India. Essentially, their growth is tied to broader economic trends. When businesses are investing and expanding, Interarch sees increased demand for their services. And right now, India is experiencing strong growth across several sectors, which creates a favorable environment for companies like Interarch.
So let's dive into those sectors. Where exactly is this demand coming from?
Okay, so warehousing is a major driver. With the continued growth of e-commerce, companies like Amazon and Flipkart need huge distribution centers, and they're not alone. Third-party logistics players like Wellspun and Indospace are also investing heavily in large-scale warehousing projects.
So basically anything that fuels online shopping also fuels the need for more warehouses. That makes perfect sense. What other sectors are driving growth?
Manufacturing is another key sector. India is becoming a global manufacturing hub for a wide range of industries, from paints and cement to batteries and electronics, and all these factories need buildings. Interarch mentioned working on projects for companies like Asian Paints, Ultratech Cement, and even Tata's new microchip facility.
Wow. It's fascinating to see how they're playing a role in building the infrastructure for India's manufacturing ambitions. What about other industries?
Well, the renewable energy sector is another major area of growth. They're constructing facilities for solar panel and battery manufacturers like Renew Power, Tata Solar, and Avada. As India shifts towards cleaner energy sources, we can expect the demand for this type of construction to only increase.
That's really interesting. It sounds like they're not just building for today's needs, but also positioning themselves to capitalize on future trends.
Absolutely. And another sector to keep an eye on is data centers. With the rapid digitization of the Indian economy, the demand for data storage and processing is skyrocketing. Interarch is already bidding on data center projects in major cities like Chennai, Noida, and Mumbai.
They certainly seem to have their finger on the pulse of India's growth story. They're strategically positioning themselves to benefit from these key sectors.
And that's what makes them such an interesting company to watch. They're not just riding the wave, they're actively shaping the future of India's built environment.
So we've talked about their business model and the exciting growth drivers in the Indian market. But what about the future outlook for pre-engineered buildings themselves? Do you see them becoming the standard for construction in India?
That's a really fascinating question. What we're seeing is a shift towards more efficient and sustainable construction practices globally. And pre-engineered buildings are well positioned to capitalize on this trend. They offer several advantages over traditional construction methods, including speed, cost-effectiveness, and reduced environmental impact.
So they're not just good for business, they're also good for the planet. That's a powerful combination. But what about the potential risks?
Of course, there are always risks to consider. One potential concern is the volatility of steel prices. Interarch relies on fixed-price contracts, which means they could face margin pressure if steel prices rise unexpectedly.
That's a valid point. How do they mitigate that risk?
Well, they have a few strategies in place. First, they use sophisticated pricing models that factor in historical steel price trends and market forecasts. This allows them to build in a buffer to absorb some level of volatility.
So they're not just setting prices blindly. They're using data and analysis to make informed decisions. What else do they do?
They also work closely with their steel suppliers to negotiate favorable terms and secure supply at competitive prices.
So they're leveraging their relationships and scale to get the best possible deals. That makes sense. Are there any other strategies they use to manage risk?
Yeah, they're also very selective about the projects they take on. They're not afraid to walk away from deals if the risks are too high or the margins are too thin. It's a balancing act between securing orders and protecting profitability.
It sounds like they're taking a very strategic approach to risk management. Now I'm curious about their financials. The earnings call mentioned a difference between revenue growth and tonnage growth. Can you explain what that's all about?
Sure. Interarch reported revenue growth of 8.5% in Q2 of fiscal year 2025, but their volume growth, the actual tonnage of steel they produced and sold, was much higher at 17-18%. This gap is primarily due to softening steel prices.
So even though they're selling more buildings, the revenue isn't growing as quickly because the price of their main raw material is going down.
Exactly. But here's the key takeaway. Interarch's profitability is tied to tonnage, not revenue. They have fixed margins on top of the steel costs, so if steel prices decline, it actually benefits their margins on orders booked at higher prices.
That's a little counterintuitive, but it makes sense when you think about it. So in a way, lower steel prices can actually be a good thing for them.
It can be, especially when they have orders booked at higher prices. It's important to remember that they're ultimately selling a complete building system, not just tons of steel. So as steel prices fluctuate, the value they provide to their clients remains consistent.
That's a really important point. Now, speaking of value, what can you tell us about their order book?
Their current order book stands at INR 1,303 crores, which represents about 9-10 months of sales. This actually highlights a key constraint in their business, the short lead times demanded by clients.
So clients aren't willing to wait very long for their buildings.
Not really. Most clients want their buildings delivered within 9-10 months max. That means Interarch can't just keep piling up orders indefinitely. They need to carefully balance their order intake with their capacity to deliver.
So how are they addressing that capacity challenge?
They're aggressively expanding. They have 3 fully integrated plants, plus a partially operational facility in Andhra Pradesh that gives them a current capacity of roughly INR 1,700 crores, but they have several expansion projects underway to meet the growing demand.
Can you tell us more about those expansion plans? What are they doing to increase their capacity?
Well, Phase 2 of the Andhra Pradesh plant is expected to come online and contribute additional capacity by Q1 of fiscal year 2026. They're also upgrading their Uttarakhand plants with completion targeted for the same time frame. And looking further ahead, they've secured land in Gujarat for a future plant that's expected to provide another INR 500 crores in capacity.
So they're making significant investments to keep pace with demand. It sounds like they're really committed to growth.
Absolutely. They understand that capacity is key to capturing the robust pipeline of projects they're seeing in the market.
Now, I was also impressed by their incredibly low working capital cycle. How do they manage that? It seems almost too good to be true.
It comes down to discipline and efficiency. They have strict payment terms, careful customer selection, and efficient inventory management. This allows them to operate with a working capital cycle of just 14-25 days.
That's incredibly lean. Most businesses would dream of such a short cycle. It's a testament to their operational excellence.
It is, and it contributes to their strong financial position. They're zero debt and net cash positive, which gives them a lot of flexibility.
Let's touch on their EBITDA margins. There was a sequential drop from Q1 to Q2 of fiscal year 2025. What was driving that? Should investors be concerned?
A couple factors were at play there. First, they had to account for ESOP provisions, which amounted to INR 2.1 crores for Q2.
ESOPs being employee stock ownership plans.
Correct. These are essentially costs associated with granting stock options to employees.
So that's a non-cash expense that impacted their reported EBITDA margin.
Exactly. And it's important to note that management remains confident in achieving overall EBITDA margins of 9-10% going forward. They see this as a temporary dip.
So that shouldn't be a major cause for concern.
Not necessarily. They seem to have a good handle on their cost structure and are projecting healthy margins in the long run.
That's reassuring. Now, before we wrap up, I want to circle back to the future outlook for pre-engineered buildings. We touched on some of the potential benefits, but what about the broader implications for the construction industry as a whole? Do you see them disrupting traditional construction methods in a significant way?
I think they have the potential to be quite disruptive. As awareness of their advantages grows things like speed, cost effectiveness, and sustainability, I think we'll see more and more clients opting for pre-engineered solutions. This could lead to a shift towards more standardized and efficient building practices, which could have a ripple effect throughout the industry.
That's a really interesting thought.
Right.
It makes you wonder how this will impact the skilled labor market and the overall environmental footprint of construction. Seems like there's a lot to unpack there.
There is. It's a complex issue with many factors to consider. But one thing is for sure, pre-engineered buildings are a force to be reckoned with, and they're likely to play an increasingly important role in shaping the future of construction.
I completely agree. It's been fascinating learning about Interarch and the pre-engineered building industry. They're clearly a company at the forefront of innovation, and I'm excited to see what they do next.
I am too. They're a great example of a company that's not just adapting to change, but actively driving it.
Well, I think that's a great place to wrap up our deep dive into Interarch Building Products Limited. They've given us a lot to think about.
They have. It's been a pleasure discussing this with you.
Yeah, it really does. It really makes you wonder what our cities will look like in the future. Will we see more and more of these pre-engineered buildings popping up everywhere?
Yeah, it's definitely a possibility, especially as cities are grappling with, issues like population growth, housing shortages, and the need for, sustainable construction. Pre-engineered buildings could really offer a solution to these challenges.
That's a really interesting point. They could be a key part of creating more efficient and resilient urban environments. But what about the aesthetic aspect? Some people might argue that pre-engineered buildings lack the character and charm of traditional architecture.
Right. I think that's a valid concern. But it's also a challenge that architects and designers are already starting to address. There are some really innovative projects out there that are pushing the boundaries of what's possible with pre-engineered buildings. They're incorporating unique facades, interesting shapes, and creative use of materials to create structures that are both functional and visually appealing.
So it's not just about building boxes anymore. There's a real opportunity to elevate the design and create something truly special.
Exactly. And I think as the technology continues to evolve, we'll see even more creative and innovative uses of pre-engineered buildings. It's an exciting time to be in this industry.
I'm inclined to agree. It's been fascinating exploring this topic with you. I feel like I've gained a whole new perspective on the world of construction.
It's been my pleasure. I always enjoy discussing these kinds of topics and seeing how they connect to broader trends and challenges.
Well, that brings us to the end of our deep dive into Interarch Building Products Limited and the fascinating world of pre-engineered buildings. Thank you for joining us on this journey.
Thank you for having me.
And for our listeners, we'll leave you with one final thought. As we move towards a future where pre-engineered buildings become more prevalent, it's important to consider the implications for our built environment. How will these structures shape our cities, our communities, and ultimately our lives? We encourage you to continue exploring this topic and engaging in the conversation about the future of construction. Until next time, keep diving deep.